Please subscribe to the channel, press that bell icon, you'll be notified of the latest videos by Kalkine. Today we're going to discover what are active ETFs. I'm Sage for Kalkine Media. Here are a few funds to look at for active exchange-traded funds that are open-ended funds whose units trade on a stock exchange just like an ordinary listed security. The fund has a manager who decides on the underlying portfolio allocation, and while the fund has a benchmark index, managers may change sector allocations, market time trades, or deviate from the index as and when needed. As a result, investment returns of active funds don't perfectly mirror the underlying index, and furthermore, the manager may issue or cancel units depending on investor activity, since active ETFs are open-ended. So, these funds generally trade very close to their net asset value, which can be attractive to a lot of investors. So how are active ETFs different from passive ETFs? While fund managers conduct detailed research to determine which stocks to hold and in what percentages, in case of an active ETF, a passive ETF tracks an index which can be a broad-based stock market index, a sector index, credit, commodities, or even currencies. In active ETFs, portfolio managers actively manage their positions depending on valuations, industry trends, and views on macroeconomics. Now we're going to explore a few popular active ETFs. So if you're looking forward to putting your money in ETFs, here are a few popular active ETFs that might meet your needs. Active Australian Hybrids Fund. This fund gives monthly income from a diversified portfolio of hybrid securities. It is actively managed, which seeks to reduce volatility and risk associated with owning hybrids directly. It has a management fee of 0.55%. BetaShares Legg Mason Equity Income Fund. The fund seeks an income stream paid on a quarterly basis from an actively managed portfolio of high-yielding Australian shares. It has a management fee of 0.85%. Perpetual Ethical SRI Fund. This fund targets long-term capital growth and income through investment predominantly in quality Australian shares of ethical and socially responsible firms. The fund has a ASX 300 accumulation index as its benchmark. It has a management fee of 0.65%. So in conclusion, it is safe to say that ETFs give potentially higher returns as they can outperform the benchmark, and they can come with potentially lower costs than comparable funds. They are viable also as they are highly tax efficient and flexible. However, investors must use their own discretion before investing in any of the ETFs outlined today. So if you like this information, please like, share, comment on the video below, subscribe to the channel, press that bell icon. You'll be notified whenever Kalkine releases their latest videos. But for more information like this and regular updates, there is a website. It's kalkinemedia.com. I'm Sage for Kalkine Media.